Good day, ladies and gents, fellow traders. Thanks for joining me. Alex Morrison with Precious Times here. Our show is all about value and commodities. I'm here today with a big question for you. A question that might change the way you think about gold. Is it really the safe haven it's cracked up to be? You know, everyone seems to talk about gold as a safe haven. Whenever there's a problem in the financial markets, gold starts to be the main subject of conversation. Brexit, the sovereign debt crisis in Europe, the Swiss franc currency crisis, a few of them stand in my memory. Can you remember any of those times when gold was the favorite buy for investors? For sure, it would have been a panic in the market and some sort of a crisis, maybe a political problem or a currency crash. Short-term panics don't necessarily mean long-term values, am I right? When someone says safe haven, surely they mean a long-term investment with a steady return. Is that really the case with gold? If you check the last decade of gold's performance, it's a real eye-opener. Take a look at the 10-year chart for spot gold. It's incredible, really incredible. The gold price has a huge annual gain between August 2008 and August 2011. In a way, the price was around $800 per ounce. Gold peaked in 2011 at around $1,900 an ounce. We're talking about $1,100 rise in 4 years, ladies and gents. Did you see that gold go? There was a lot going on in the US markets during those 4 particular years. Concerns over systematic bankruptcies and downgrades by rating agencies were all over the media in 2008. Just remember how you felt watching the news about Wall Street, even for 90 seconds.
Apple's up more than 6% right now. Google about 3%, but Dell, Intel, Research Motion, and Microsoft are all to the upside. Look how strong.
Trading did not disappoint. 400 points higher. Yes, indeed. The markets roar higher last 30 minutes of trading as volatility once again rules the day.
Most of the techs this morning, if not all of them, have just exploded to the upside. We are better than 5% to the upside at NASDAQ, 114. We're down 1.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 5%.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
I have never live looked at the Dow Jones Industrial Board and seen a 600-point loss.
Who knows where this is going to end up? I mean, this is volatility we haven't seen, of course, since way before you and I were born, even before our grandparents, 1929.
So almost everything there completely wiped out. And the NASDAQ, everything and more has been completely wiped out.
The Dow traders are standing there watching in amazement, and I don't blame them. The credit market...
676 points down.
It was the worst day on Wall Street since the crash of 1987.
From the financial capital of the world, the opening bell is going to ring in 5 seconds, and to be honest with you, we wish it wouldn't.
Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did.
At the time, newscasters reported on massive withdrawals from markets worldwide. The global panic meant that stock markets and banks lost billions of dollars. And of course, gold started surging. The 2008 financial crash in the US was followed by the European debt crisis in 2009. Greece alone borrowed 300 billion euros between their years of 2009 to 2018. The country almost left the European Union because of the financial pain. It only recently emerged from the crisis, and to be honest, some may argue with that particular statement as well.
To understand what's happening with Greece and the Eurozone, think about a dinner party. If you're cooking just for yourself and your spouse, it's easy. You make something you both like. But if you've got guests, things get harder. If you need to accommodate a vegetarian, and someone who's gluten-free, and someone with a soy allergy, your options get really limited. And that's the problem with Europe's idea of having a whole bunch of countries all use the same currency. So Greece's economy is in a disaster. A quarter of the population is unemployed, and it has this very high debt burden. Normally, if you've got really high unemployment, what happens is that a country makes its currency cheaper by printing extra money. That makes its products cheaper on world markets, it makes it a more attractive tourist destination, and it means that foreign investors can get great bargains. But if unemployment's really low, a country likes to have an expensive currency. That increases people's purchasing power, and it keeps prices down. And in Europe, you have a bunch of economies that are really different. A price of euros that's appropriate for Greece, where they have a 25% unemployment rate, is way too low for Germany, where the unemployment rate's below 5%. And Greece's problem is that it's small, poor, and geographically isolated from the rest of the Eurozone. It's like the only vegetarian at the barbecue, except when it comes to currencies, there's no side dishes. And so there's plenty of specific decisions we can second guess, plenty of things Greece did and various banks did that we can question. But fundamentally, having all these countries come to a dinner party with only one dish on the menu was a mistake. The euro was a project that Europe set about on for really political reasons. It was a symbol of their determination to have peace on the continent. But they didn't really take the economics of it seriously. So Greece joins the euro in 2001, and initially it works out great for Greece because all of a sudden everyone was like, yeah, sure, let's lend the money. So they borrowed lots and lots and lots of euros, except that didn't change the fact that their economy is a lot weaker than some of the other European countries. So to really work, you would need a much, much, much closer union, where you had big financial transfers coming from the richer places to the poorer places all the time. In the United States, the poor states like Kentucky, Mississippi, Alabama, they're constantly getting money from the richer states like Massachusetts, California, New York, through the welfare system, through Social Security, through Medicare, through Medicaid. And, people may sort of complain about this or that program, but we don't dispute the idea that it's all one country, so money's going to circulate around. Europeans, they just don't feel that way. Germans are willing to support poor German people, but they don't want to support Greek people with their tax dollars. So they're kind of like halfway integrated in a way that doesn't really work.
The multiple bailouts of Greece, Spain, Portugal, and Cyprus worked down the Eurozone sentiment. In 2012, gold's rapid rise wasn't sustained at 2011 highs, and the price dropped fast, falling towards $1,600 an ounce. But that doesn't mean that the financial problems had ended. The EU debt crisis distress did drag on, and so in 2012, the unemployment number rose to record highs within the European Union. The big difference was that the US Federal Reserve had started quantitative easing, and QE supported the United States dollar. And as we know, in many cases, when the US dollar is stronger, gold is weaker considering the divergence between the two assets. In 2013 and 14, the US economy started strengthening and getting back into GDP growth because of improved sentiment. Gold tracked an inverse relationship to the US dollar, falling to $13.50 an ounce by the end of 2014. Then something really interesting happened in the commodity markets. From the end of 2014, commodities entering into a bear market. Now, oil prices crashed, but gold kept its shine. In 2016, gold rose to just under $1,400 an ounce because of the Brexit referendum. The UK decided to leave the European Union, and this is what happened in the media when the result was announced.
The epic decision coming after a long night of suspense that began the moment the polls closed.
Counting is underway of tens of millions of votes in the EU referendum.
More than 30 million votes cast, each ballot counted by hand. Within minutes, the first results and a sign of things to come. The northern working-class city of Newcastle barely voting to remain in the European Union, and nearby Sunderland, a landslide vote to leave. The market's already sensing danger as those first returns start coming in. The hours pass, people staying up all night, their faces etched with anxiety, a whole country on edge.
A night of great suspense, but we don't know what's going to happen, do we?
And every hour made the pattern clearer. You can see it on the map. England and Wales voting to get out of the EU. London and the suburbs voting to stay. And Scotland and Northern Ireland overwhelmingly pro-EU. So just before dawn, the BBC calls it.
The British people have spoken, and the answer is we're out.
For those who wanted to stay in the European Union, utter heartbreak. Like J.K. Rowling, creator of Harry Potter, who tweeted, "I don't think I've ever wanted magic more." And Scotland will seek independence now. But it was sweet, sweet victory for those like Nigel Farage, whose right-wing party fought for this moment for years.
The sun has risen on an independent United Kingdom.
As the morning papers blared the news, some were stunned.
I'm completely and utterly devastated. Can't actually believe it's happened.
Others delighted.
Winston Churchill would be proud of us. He'd be up there now looking down at us. Well done, Great Britain.
And the agony of defeat. Prime Minister David Cameron outside number 10 Downing Street, choking back emotion with the surprise announcement he would resign in the coming months. It was an emotional campaign, and immigration was a driving issue. This controversial poster capturing the feeling of so many. Breaking point. Late morning, Prime Minister Cameron going to Buckingham Palace, meeting with Queen Elizabeth to chart a way forward. And the hangover, and in some cases, regret.
Simply because this morning the reality is actually hitting in and the regrets are filling in.
Pretty scary, isn't it? Since 2016, gold has declined, falling to just under $1,200 an ounce. When you look at the long-term 10-year performance, there is a lot of volatility in the gold price. So what do you think? Is gold a safe haven, or does it just seem safer when volatility and fear are greater in other markets? Thank you for watching. This was Precious Times. I'm Alex Morrison. I'll see you next time.